Hi folks, welcome to Ditto Insurance. This is one video that you should really not miss watching because after watching this video, you will know that you can claim deductions in your income tax if you have a health or a term insurance. So to explain each and every bit of the ATC and the ATD deductions, I have with me the Senior Program Manager here at Ditto, Sushant. Welcome, Sushant.
Thanks, Sushant.
Sushant, I think we are living in a time where we are being taxed even for different flavors of popcorn. Though there have been a lot of memes floating around, you cannot ignore the fact that at the moment we are being taxed the most in India. And anywhere where we can save money on our ID returns, I think we should grab a chance. So if the folks who are watching this video have a health or term insurance, they do have the right to know that they can claim deductions on their ID returns. So let's start the video without any delay. So what do you have for us?
I think, with tax season around the corner, this is definitely a hot topic of discussion. And not only that, I think with the fact that we're a country with dual tax schemes, right, or dual tax regimes, it's obviously confusing for a few people, right? Firstly, to understand how this even works, and then to also get an idea on which one is more suited for them. So just to probably give them a rough overview before we go into it. The old tax regime offers deductions as well, but has higher tax slabs, meaning the amount of tax or the percentages of tax I need to pay there are higher. But they have deductions wherein suppose my income for the year was 10 lakhs, I can claim deductions for life insurance, health insurance, and various other things, thereby bringing down my taxable income. So that's one aspect of it, which is the old regime. And the new regime doesn't offer any deductions whatsoever, and it has lower slabs as well. So like I said, it really comes down to your specific profile and which one would suit you better. But we'll, of course, today be discussing just the insurance-specific aspects of the deductions, because obviously we're not, CAs or CA certified sort of individuals here. So I think it's best to stick to just the insurance part of it.
Right. So what do you want to start with, term or health?
Let's do term first, I think, because that's a bit more simple and straightforward.
Okay.
So any form of life insurance, not just term insurance, any form of life insurance, the premium that you pay can be claimed under Section 80C of the Income Tax Act. Now, 80C has a limit of 1.5 lakhs per year. Now, there's also a rule that came in that any policy purchased after April 1st, 2012, your premiums should not cross more than 10% of the sum insured for you to be eligible for this. Now, just to give you an example of what I mean by that, let's say if somebody has a term insurance plan of 3 crore and his yearly premium is 50,000 rupees. This is well within 10%. This rule comes in more for endowment plans or ULIP plans, the other forms of life insurance, wherein my sum insured itself is, 10 lakhs and my premiums per year are 1 lakh change. Because there's obviously investment and insurance combined to this. Right. But here, what essentially would happen is my premium has crossed 10% of the sum insured. A 10 lakh plan, the premium itself for 1.5 lakhs. So that obviously wouldn't be possible for me to claim under ATC. It's a very rare edge case situation, but no harm in sort of just highlighting it.
Right.
Pure term insurance, pure life insurance, nothing to worry about. It's under, if it's within 1.5 lakhs, you can claim it here. That's what it looks like, yeah.
All right, Sushant. Now let's take a look at health insurance deductions.
Yes, so I think this has a separate section just for itself. It starts with firstly 25,000 as the limit. This is section 80D. So there's 25,000 as a limit if you're buying health insurance for yourself and your family. Now, if you're buying health insurance for your parents as well, you have a separate 25,000 limit that you can claim for them. It gets even better if your parents are above the age of 60. If your parents are senior citizens, considering the fact that their premiums also shoot up, the insurance companies and the government, more than that, has sort of acknowledged that since the premium you're paying is higher, the limit should be higher as well. So now it's 25,000 for you and your family. And if your parents are senior citizens, it's 50,000, not 25. So you have a sum total of 75,000 that you can claim here. Now, taking it one step further as well, if you yourself and your parents are senior citizens, if an individual is, let's say, 60 and his parents are 80, mid-80s or so, the limit goes up to 1 lakh now, considering that for both individuals combined, the premiums would be quite exorbitant.
Okay.
So they have given some flexibility and they've been considered with the age as well. I think that's one of the most important ones here. Right, because unlike life insurance, health insurance premiums keep going up with age. And they don't want a customer to feel that burden. But especially beyond 60, there's a chance you're not even working, you're not earning, but you're paying these high premiums. So at least there should be some form of benefit that you're getting. Additionally, under 80D, there's another section called 80DD. So this is for people with special disabilities, right? So if an individual is taking care of his family members who have special disabilities, there's a separate section where you can claim expenses that you're sort of incurring to, for their livelihood. It's about 75,000 for normal disabilities and 1.25 lakhs for special disabilities. So it's a separate section that they have to kind of take care of this as well.
All right, Sushant. Now, do our audience need to keep anything else in their mind?
Yes, there's a couple of pointers I would like to highlight. One, always make your payments through digital modes, meaning a UPI, a debit or credit card, or any sort of online payment. You can't pay in cash, is my point, because for those you won't be able to claim any deductions.
Okay.
You have to show proof of payment.
Makes
Now,
sense.
this actually might be possible maybe through some offline agents, but most online channels where you purchase insurance, you won't have to worry about this. Secondly, please make sure you have all your documentation in place. So, in order to actually claim these tax benefits, your CA will ask you to submit the premium receipts that come with your insurance policy, the separate receipt that the insurance companies will share with you,
Right.
which is used for tax purposes. It's in the correct format and everything. You just need to make sure you have that document ready. I think that's about it. There's really not much else to be mindful of.
All right, Sushant. Thank you so much for this quick and short, I think, explainer on how people can save on taxes if they have health and term insurance. So, folks, if you don't have a health or term insurance yet, then there is no better time than buying it now. So, book your free consultation with Ditto with the link in the description. And if you already have a health and term insurance, and if you have doubts regarding the taxes, then you can comment in the comments box and we will get back to you. Or again, you can book a call with us and we will clarify it for you. I'll see you guys in the next one. Happy insurance hunting.